This is Satya Pradyuman of Cirrus Research. The latest global positioning report is just out. The title in this quarter is US Small Caps Most Compelling Discounts Globally. Let me walk through some of the comparisons here. This candlestick chart represents a few of the critical markets we compare. There are 10 in total, but we pulled out some of the extremes here. What you're looking at is basically about 20 years worth of relative valuations between small and large in each market. And what you'll find is that this is the range they trade in. This is currently where they are. If you adjust this to sort of a Z-score standard, what you're seeing is the US scale to the right is about 2 standard deviations below normal. This is going back the last 20 years. So in other words, small caps relative to large are significantly discounted. Now, the other side of this is it could be that large caps are also super expensive. But at the heart of this, though, is that it does open up the opportunities for why small caps can work. Take January, for instance, even though the larger cap market went up a good 6%, the US small cap markets went up over 10%. So this is an example about sensitivities to good news in the marketplace. The second chart, we want to also underscore the opportunities in Asia Pacific as China continues to ease conditions on financing and its real estate market concerns. Credit markets have begun to rally in Asia. This allows good comparisons, the fundamental comparisons of Asia Pacific region to surface. What we've seen historically is that as credit spreads rally, multiples tend to expand. And so we suspect where we're currently at really a historic level in discounting as well in Asia. This is likely to bear well in the quarters to come. And then finally, a cautionary note, and we continue to really harp on this regarding the UK. This chart relates the earnings expectations for various markets. And what we're seeing right now is that the UK market, we're looking at fairly adverse conditions where the estimates have been cut sharply. The concern we have, however, is that what we're also witnessing in the same fashion is that credit spreads are continuing to widen in the UK, unlike Europe. So this tells us this is really a wait and see, potentially discounting that's there that may remain discounted for longer. So definitely a market to watch. Take a look at the full report, and as always, we welcome your feedback. Thank you.